Hello, welcome to a new webinar. My name is Ismail, account manager in IQ Option. Please let me know by chat if you can see me, if you can hear me, audio, video, if it's working fine. Once you confirm me, we are ready to go. We had a small technical issue, but it has been solved with the mic and the recording, but I think now it's okay. Yeah, so I think it's fine. Hello, here Ismail, account manager in IQ Option. Today webinar is about indicators, so a very nice one. We have prepared. We're gonna check a bit of technical analysis and as well some fundamentals, something that can help you to build a method, a way to trade. Let's start presentation. So here we are, how indicators work. Part 2, we had a part 1 before where we were checking leading and lagging indicators. We will do a small recap now. You are welcome to watch it in our YouTube channel. So let's do what we've seen before, types of technical indicators. Leading, they attempt to predict where the price is headed. It's going up, going down. Lagging, offer a historical report of background conditions. So lagging, let's say it's explaining me how we have reached this point, where we come from. Leading, it try to tell me the next movement. Thank you very much. You are confirming there. You can hear. Perfect. Thank you. These two, leading and lagging, can be divided in trend indicators, momentum, volatility, and volume. Sorry if I didn't mention, but of course, you are more than welcome to leave me your suggestions because we will go later on. We will go to live accounts. Few assets I have prepared, the most traded ones, but of course, if you have any suggestion, you want to, I don't know, you are trading Twitter, we can have a look in a technical way to see where the price might be going. Today webinar, mostly we're gonna check moving averages and few leading indicators just to remember. So what we're gonna see, what is a moving average, the different types of moving average, where to find them, how to use them, okay, in our platform. Now we're gonna combine as well this moving average with different leading indicators, can be the CCI, can be stochastic oscillator, can be the mark, can be RSI, can be any. Moving averages are included in many already in different indicators. So small definition of what is a moving average. You can see it's a way to add price after price after price in order to build the average price of that underlying asset in a specific amount of periods. That amount of periods is up to you, can be 10, 20, 50, 200, no problem. Any one of them can be called a moving average. There are 4 different types. Simple moving average. Simple means 1 plus 1 divided by 2. That's my average. No extra weights, no extra importance. All of them, they weight the same. Now we have the weighted moving average that this one gives more importance to the latest candles, to the latest periods. Then we have the SSMA, a very smooth one, very slowly reacting to the prices. And then the exponential moving average. This one is a mix between the SMA and the WE. Exponential also giving more importance to the latest period, but not so much as the weighted one. So types of moving average, simple. So this one, the more balanced. A bit slowly to react, but more consistent and the most popular, of course, by far. Everything, everywhere, if you see a moving average, probably, unless it's specified, it will be a simple moving average. Then we have the SSMA, the smooth one. Of course, less subjected to noise because it's slow, but this is the bad thing of it, right? As it's slow, we can miss maybe an entry point or something, but can be nice to see maybe the main trend, right, where it's heading. And then we have these two, which are the most fast ones, the fastest. We have the exponential, balanced reaction and consistency. And then the W, the weighted one, which is the fastest, the quickest, can give you the signal to enter in a trade. But of course, because it's so fast, it can be a bit less reliable. All of them have pluses and minuses, so it's up to getting to know them and choose which one works better with you. How to find them? Very easy. We open our platform. You will find these 5 icons here. So this one, which is named indicators, you open indicators, you see these different ones. Excuse me. So you see these are all the different categories that we have. You select moving average. Here you have different ones. So moving average, small definition here. And after clicking on it, you select first the period, then second the type. These are the 4 types that we have been mentioning, and then the thickness of the line, and of course the color. Then apply, and you are ready to go. How these moving average do they look in the chart? Like this. You remember we were talking who is the slowest, who is the fastest. Here it is, orange one, which is the W. Of course, you will always see it closer to the current price. Why? Because it gives more value, way more than the exponential, way more value to the latest periods. So you will see it always getting closer to the current price. Red one, the simple moving average, and by far you find there the SSMA, right? The slowest, but of course more accurate in order to defining the trend. Leading indicators, what we have been mentioning, yes, 2 leading indicators that also they include some moving average inside, and that the moving average can be combined are the CCI, which is this. It's called Commodity Channel Index and measures the difference between the current price and the historical average price. What it means it takes a period of time. You see the 14 here. That's the period that you can select in settings. Okay, can be customized, of course. And what is showing you is how far is the current price from the historical average one. So in 14 periods, if my price is in the middle, it means that, okay, well, the price is in the average. However, let's say this situation here below the minus 100 is very far from the down, right? So what can be telling me the CCI is that a potential reversal may happen in order to convergence back to the average historical price. And same when I'm here. If I am here, it's too far from the average, a potential reversal might happen to meet again the average price. A different one now, stochastic, also similar. This one is telling us as well the overbought and oversold situation. It ranges from 0 to 100. As you can see, here we have 2 lines. So what we are waiting for the crossover confirmation. The blue line goes above the red one. Okay, that means the oversold. Okay, if we are here in the red line, it means that the asset has been very, very oversold. Now, the blue line going above the red, the oversold situation might get over, and we go towards the top. If we are above the red, it means it's being very, very overbought. That asset is being bought, has a lot of demand, and it might continue for longer. Until when? Until I see a crossover, and now the blue line goes under the red one, not above, but under. If that happens, I might consider a sell position because the overbought situation might be done. So a few combinations, leading, lagging, the 2 different types of indicators. You can mix them. Your moving average, MACD, Q-stick, alligator, all of these, RSI, of course. They all include as well probably a moving average. If not all of them, the vast majority, moving average is very, very used in a different way. So of course, not always as a simple moving average. but in different ways. Let's go live to see there's some examples. If you want us to, oops, sorry, okay, here. If you want us to check something, some asset, we're gonna check maybe, the most popular ones. If you have something in mind, please leave a comment. You are more than welcome. Okay, this analysis, let me break it down. I'm gonna clean the whole chart and make it from the beginning so you can see what I mean here. These, of course, are two moving averages, some trend lines. Let's clean it, empty all, and make it from zero with you guys. These as well. Okay. Now we are in euro dollar, we are in 1 day. So I'm seeing few years. What is the last year? August last year. Yeah, we are here. Euro used to be 118, 119. Who will tell us? Now we are close to the 1-1, right? That was quick. And so what do we see here? What do I see? I see, okay, upward and here downtrend, right? Very strong one, very clear. I can go to my graphical tools. Remember that I have these two different, I have 5 candle time graphical tools where I can draw, and here the indicators. My graphical tools can be, of course, also an indicator because it's indicating me whatever I draw might be telling me the price the asset might be heading, right? So if I draw, let's say, one line, let's say one there, I copy it, and the other one here. So I have this very, very downtrend, very big downtrend, which got accelerated. If you realize here, it got accelerated. Let's draw it, maybe something like this. There it got very, very accelerated, but doesn't, if we even break this line, doesn't mean the trend is over. It's just back to the original one. Just here it got very more aggressive than before. Let's see if we can see some support that can help us to reach a top to this fall down. Let me amplify a bit, 1 week. Zoom out. Okay, so I see the previous lows were here. Let's draw a horizontal line. Let's say here. Okay, what about there? See how that price actually, I'm in 7 days. So if I go 1 day, we will see how already the price tried to reach there and bounced back once, twice. See in 1 day how many there are, probably more. Yes, it worked really well. That support worked really well. One attack here, bounce back, another one here, and then the fourth one, it broke it. Once it broke it at very, very strong support or either a resistance, once they break, usually they go all over, right? We are saying a support that never was broken. Once it got broke, see how even we went even down the parity, under the 1-1. And now the price, what was before a support, now is acting as a resistance. We tried to break it here, we couldn't. Here we couldn't as well. To close at least the candle above, we couldn't, and now again a rejection. What else? Well, let me delete. Now I'm gonna implement the moving averages. Let me delete this line. So let's see what we have in moving averages. I'm gonna show you a very common combination, which is the 50. Let's draw it in yellow, why not? SMA, okay, I keep it simple. The 50 plus the 200. This is a very common combination. I want to show you. Moving average, 200. Okay, there we go. Color green. Okay, great. Now I have two moving averages that sometimes they cross over one of the other. Now, Why this 50 plus 200, I said it's very popular, it's very common, is because they are the responsibles of what is called death cross and golden cross. Something very important, something to pay a lot of attention. And see how reliable they are, especially in bigger time frames, especially in 1 day, 12 hours, 8 hours, 1 week, of course. If you can apply it in 5 minutes, it might work, but it will be a bit less reliable, slower time frames, more noise. But you see how in 1 day it worked really well, right? Except here that I will explain you later. See how we call it golden cross, death cross. They have something good is happening, something bad is happening. So when the yellow one crosses above the 200, the 50 above the 200, it's supposed to be the golden cross. Why? Because the price might go up. Now, if it happens the opposite, as here, death cross, because the price might go down. Here it worked really well. We got the crossover here, and see how this 1 day candle, so see how many days, weeks, months the upward trend was activated. Then again, here, maybe at this price, at this candle, I got the death cross, and see how catched all these downtrend for months and months, not only weeks, not only days. So it worked really well there. And here again, another one, the last golden cross, it worked again really, really well. It went up for a lot of time. Now, here didn't cross, so it worked also very good because the price was still going up. And here a death cross, right? And the death cross, see how from 118, 119 almost, all the way till now and more, right? So see how much profit would that be. This one worked. You will see it if you check a website, if you check different analyses. People use this one a lot, 200 plus 50. You can save it. I think I have already saved it, but okay. Let me show you how to save it in case you wanna use it and you don't want to go to the settings and everything. You go to added. Yeah, because it's added. Yeah, okay. Can I delete it? Okay, so maybe I can add it now. Yeah, great. Let me see. Okay, I can't. Fine, no problem. Let's do it again. So I show you how to keep it safe in your account forever. So you don't have to go all through this, right? All through the settings. So we paint it again. Let's say green, a bit thick. Now once I have it, I go to indicators, add it, and now, here, save indicator template. Save indicator template, golden plus death. Cross. Okay. Save. Now here you have it, gold. If you go let's say you go gold. Okay, you have gold there. Okay, erase everything. You go to templates, golden and death. There you go. Quick and easy. Go back to Euro USD. Something that I wanted to mention. Yes, it works really well. Moving average, they work really well in trends, either up or down. See the mess that we have here. We don't want to use moving averages in sideways movement. They don't work well in those situations. How can we identify that? The largest moving average, the 200, can help us, because if it reaches this flat situation, that means that the price is there is no trend in the price. So I don't know what's happening. I don't know if it's going up or down. I should trade this in a different way. I can put, when the price is just going up and down in a same range, put a resistance, put a support, maybe an RSI, maybe a stochastic, and then you can trade like that. But in these cases, moving averages are not the best solution, because see here how many crosses we have. They don't take us anywhere. Not good. However, once the 200 takes a shape of a trend, then yes. And now here again, it doesn't go flat, it goes down, and the price goes up. It doesn't stay longer inside the same channel. So from downtrend, we go directly to uptrend in the 200. So we are safe to trade there. I know this is a trend. The golden cross happened, so I'm okay. And here as well, here it goes flat for a little while, but then see how, boom, downtrend, right? So that's where I want to use my moving averages. And here again, right? Even no flat here, perfect. Going from down to up. And here again, right? No flatness, so that's perfect for the moving average. Let's move to SP 500. Let me delete everything. We clean the screen, so I show you from the beginning. Indicators, delete. Okay. Another way that we can use the moving average, another way can be using them as supports and resistances, even a dynamic, you can call it a live support, because we'll be keeping moving. You know, when you draw here, as I did in Euro USD, right? This is a support that it's a horizontal line, doesn't move. However, a moving average can be a dynamic support resistance. Let me show you. Let's make a different set slightly. Here I'm gonna use, okay, let's use the same gold, so we have already there, okay. And I'm gonna implement as well, because this is 50 and this is 200, so I'm gonna add a 100. 100, great, purple. A bit thick. Okay. Now, what these moving averages are telling me? It's telling me that we have been on both of them in a very solid uptrend for a long time, and then we went down. So downtrend here. Now the market seems to be recovering. How can I use these moving averages? Let me zoom a bit. How can I use them? Well, I can consider that, okay, the price is recovering, it's targeting the 50 moving average. Okay, have we crossed over it? Yes. We attacked it one day, this is 1 day candle, the next day we are over it. The price tried to went down and now used the 50 moving average as a support. Support, bounce back, support, bounce back, support, never went down again, and bouncing back. Now here, what can we think? Okay, next target, what can be? The 100. The 100, so we tried here one attack, a second one, now it's acting as a resistance. Finally, we broke into it. Now we are above the 100, we broke the resistance, and now we use it. See how the next candle used that moving average as a support. Here, this candle, and the next one also, using that 100 as a support. Now what happens next? Boom, big jump in the market. What can I think now? Well, I can say, interesting. Now we can be even targeting the 200, which is around the 430, a very, very strong support resistance as well. See how even I can draw a horizontal line. All these prices here, taka 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 ta, boom, again, again, again. So a lot of noise, a lot of orders there. So it makes a lot of sense in this case. And I might think, okay, I want to see what happens here if we attack this 200 moving average and we broke up above it, over it, and then I am here then we might target new highs. However, if we use it as a resistance, we never break it, and we lose it, now I might start be thinking that, okay, we can target the 100 and target then the next the 50 and starting a downtrend, right? A retracement. So this is another way to use the moving averages. They can be used as support and resistances, of course. See how also this might remind you to an indicator that we have in the platform, because here these three like a crocodile mouth or pound, right? Something like that. See how, let me for a moment hide it, and if I apply the alligator, you will see it very similar probably, right? You see, because the alligator is also three moving averages in its own way, of course, different settings, but also moving averages. And see, no, it's forming like the open mouth of a crocodile, no, something like this. And the signal in this case will be here, no, when the mouth starts to open and the yellow one goes above the rest. So here will be a buy point. Here a lot of mess because same as we said, no, alligator moving averages, they don't work well in sideways movement. However, if we see a trend, here worked really well also for the retracements. Retracement, now back again, retracement, back again, go into the trade, buy. Okay, the mouth is like closing, exit, opening, go in, exit. So it works really well in trends. In trend really works really well. And here is telling us the alligator buy here, and when the mouth is starting to get close, you can exit, right? So for that, it helped us also having the moving average, the 200, in a potential support here, no? Again, around this line. Well, that's it. If you have some suggestion, please leave me in the chat, and we are more than happy to check them. We can finish the presentation. This is what we have prepared, different ways to use moving averages. And to sum up is this, it's 50 to 100 most popular, also 20, also any number. It's not any number. 55 doesn't have to be a round number. They are usually round numbers because it's what you will commonly find whenever you are checking something. 50 to 100 mostly used for golden cross and death cross, and then also use them. You can use them for potential support and resistances. They can be useful also for that. Some fundamental, some technical can help you to, of course, the more information you may have, the more chances to have a successful trade. If you want, of course, you can leave a like, you can subscribe, you can leave later in the comments. If you want, we can check one webinar only for Forex or for stock markets, some analysis. It will be a pleasure. So thank you very much. Today, Friday. Have a very good day, have a very good weekend, and see you the next time. Thank you, and bye-bye.